for joining us. Today, we have a special session where we are joined live by one of our Getting Started course classes. It's here with us. So they're joining us live from this end, and they'll be listening in to the conversations that we'll be having today. Like we always say, that we are here committed to you to meet with you every week for at least an hour or less, where we'll be discussing pertinent issues to do with payroll. Now, today we have a very short topic, which is very important, I think, where we just want to discuss a few manual calculations that are usually automatically done by the system. They are automated in payroll, but it's good for us to know how the calculations are being done. This will help us to check and audit the payroll to ensure that it is also doing the correct calculations. So we are going to be looking at this over the next few 15 to 20 minutes or so, and then I'll open up for any questions that we may have for today. Right, so thank you very much. Let us start. Our manual calculations, basically we are saying these are calculations that you need to know that are done by the system, but it's also good for you to be able to calculate on your own. Some of you may already know these calculations. They are simplified, but it's good just for us to touch base on them and for us to make sure that we all understand how the payroll is actually doing these calculations for you. So let's look at the very first calculation that we want to look at today. The first one we want to look at is your overtime. Now, overtime, this is time worked over and above normal working hours. When an employee is expected to work let's say, for example, 45 hours in a week, and then they work 52 hours, it means they've gone over the normal working hours and they should be paid. Now, a premium is paid for this overtime at either 1.5 overtime worked during the week. So that's the premium that we then use, which is 1.5 hours for every hourly rate, or it can be double time for hours worked on Saturday afternoons or Sundays, as well as public holidays. You can be paid double, and then you can also be paid treble if you work on public holidays. But this depends with the industry that you are in. Some industries recognize public holidays separately from your Sundays and your Saturday afternoons, and therefore they would like to pay that at a higher premium of ×3. So what that therefore means is, before you even start checking the payroll, make sure you understand the overtime calculation, which is given to you in your industry in the collective bargaining agreement. As a payroll administrator, it is always good to have your CBA, because some of the formulas are also given there. So it's not all industries that pay out at ×3. Some industries pay out at 3. Some industries also pay out at 1.5. Some industries don't even have overtime. So just check with your own industry and ensure that you're using the correct formulas there. Now, the formula for calculating overtime is your basic pay divided by hours in a period. And this period, it can either be a pay cycle, which can be a weekly cycle, or it can be a fortnightly cycle, or it can also be a monthly cycle. So we are now saying the hours that are in that pay cycle multiplied by the rate, which is either multiplied by 1.5, multiplied by 2, or multiplied by 3. And then you multiply that with the number of hours that an employee has actually worked. So this is how the formula actually works, and this is the one that is given. It's only the parameters for your premiums that may change. The formula for calculating overtime is usually the same. Let's do an example together, shall we? So a basic salary of $500 works 10 hours overtime during the week at the rate of 1.5, and in a month he works 176 hours normal time. So the way you would then calculate is you take your $500 divided by 176, which are the total number of hours the employee works in that month, multiplied by 1.5, which is the premium, multiplied by the number of hours he has worked, which is 10, which gives us a total of 28.41. That's the value of the overtime that will be paid to an employee. And remember, this is the value before tax. In other words, it's going to be added to an employee's basic salary, and all other allowances for the computation of tax. I put a second example as well, where an employee is also earning $500, but this time they work the overtime on a Sunday. Hence, they're being paid double time. So it will be 500 divided by 176, multiplied by 2, which is the premium, multiplied by 10 hours, which will give us 42.61. So if the employee is to work those 10 hours on a Sunday, they'll be paid more because it's now double time. And they'll be paid $42.61 before tax. Now, what's very important and critical to remember here is that if you do not have the correct hours for the pay period, you may calculate incorrect overtime. So it is very important after this presentation that you go and check your hours for each employee on payroll. Go and ensure that the total number of hours per pay period is the same. It should either be your 176 or 208, some even go as high as 216. So just make sure you have the correct hours in a pay period. And you find this in the master file under your pay rules. Ensure that you've got the correct hours in a pay period there. If you are able to export, you can export your master file, go and export your basic hours, and you'll be able to see how many hours each and every employee has, and ensure that they've got the correct hours there. Otherwise, you could be overpaying or underpaying your employees. Now let's move on to the next one, which is now your cash in lieu of leave. Now, this is converting leave days to their monetary value. And employees can sell back their days to the employer and not go on leave. Or it is also paid as a terminal benefit, where when an employee resigns or when an employer terminates the contract of employment, then you are supposed to pay an employee the days that have accrued to them. And so when you now look at the formula that we have, the formula is your basic pay divided by your annual leave rate multiplied by the days cashed. So here, what is important is to look at the annual leave rate. Now, your annual leave rate, this is the rate at which an employee accrues their leave. You could accrue your leave at 30 calendar days. That is permissible. An employee can also 2 working days or 26 working days. And so these are the leave accruals that can actually be used in an organization, and all of them are permissible. Now, when you look at the 30 calendar day system, that means an employee is getting 2.5 days per month. Now, when you're now calculating the value of leave, you now need to calculate the daily value of that leave. Now, a lot of people confuse this with the daily rate for basic pay. When you are calculating the daily value of leave, you have to use the leave rate. Let's look at an example that I've done for you. With your cash in lieu of leave example, an employee who earns $500 per month accrues 30 leave days per year and cashes in 14 days. So you are going to then say $500, which is the basic pay, divided by 30, which is now the rate at which they accrue their leave per year, multiplied by the days they wish to cash, which is 14 days. If you do that calculation, you're going to find that you will arrive at $233.33. Now, when you look at that, if you are to divide 500 by 30, that will give you now the value of leave per day. Now, that value of leave per day is different from a daily rate of your basic pay. When you're now looking at your pay rate, because your pay rate, if your employees work 22 days in the month, that means the daily value for your pay rate, you're now dividing 500 by 22. But for leave, you're dividing 500 by 30. That will give you a different leave value. So be very, very careful. A lot of you are actually making the mistake of getting an employee to accrue 30 calendar days. But when you now want to calculate their leave, you are now using 22 because you want to use the basic, the pay rate of 22 days. That's incorrect. You should use the rate at which an employee accrues their value. That is the rate that you should use to calculate the value per day. Also remember that your cash in lieu of leave is taxable in full. What does that mean? In the past, I think it was prior 1999, you could spread the tax on your cash in lieu of leave over 3 years. That means if you are to sell your days, whatever tax you had, you'd pay a third of that tax. The remainder you'd pay in the following year and the following year. But that was then abolished. It's no longer there. It means that when you now get your leave, your cash in lieu of leave, you pay your tax in full in the month in which you are awarded that cash in lieu of leave. Right, let's look at the next item, which is your retrenchment package. Now, your retrenchment package, this is a package that is paid for loss of employment. So it is a compensation for loss of employment that is given to an employee. Now, according to SI 191 of 2024, it is calculated as 1 month salary for every year of employment. I know when this package was introduced in 2015, when it was introduced in 2015, it was calculated at the rate of 2 weeks for every year of employment. But now it to now 1 salary for every year of employment. Please take note. If an employee has worked for 12 years and is earning $500 per month, you then say 500 multiplied by 12 years of service to give you $6,000. That is what the employee will then be paid. So if you are going to be doing a retrenchment provision, I know some of you clients like to do a provision for retrenchment. You can actually then use that formula. You can take how many years an employee has worked, multiplied by the current basic salary, and then you find out how much your how much your retrenchment would be for that particular employee. Now, it is also very important for us to take note that a retrenchment package has a tax-free portion, meaning that it is not wholly taxable, but part of the retrenchment is tax-free. I think I've done a Zoom session on retrenchment on its own, and we've also looked at the computation of the tax-free portion. Also, if you so wish, this month end, on the 28th of April, we are having an FDS and HR workshop here at Touchstone at the base. We are inviting you to come in. We'll be also looking at the tax computations of employee earnings. So we'll also be including the retrenchment package and looking at how we calculate the tax on retrenchment. So you can join us then. And you can get the presentations. Zimra will also be there with us. So you can come and get those presentations and you can take it forward. Okay. So this is how we calculate your retrenchment. You can also have a look and see if with your employees, especially if you want to then retrench any employees in your organization. Now let's look at the last one for the day, which is your gratuity. And basically a gratuity, this is a reward for long service and loyalty. So we are simply saying thank you for being loyal to the organization. And there are quite a number of ways in which it can be paid. Some give what are called long service awards. Some give a gratuity. Some pay this gratuity at the termination of a contract of employment. However, the formula for the calculation varies from industry to industry. And so you'll find that each industry has its own way of calculating gratuities. And so what you need to do is for a specific calculation, you now need to also consult and check with your collective bargaining agreement. However, it is usually calculated after a threshold of years, That also varies from industry to industry. Some industries start paying out a long service award or a gratuity after somebody has completed 3 years of service. Some started 5 years. I know of other industries, I think it must be printing, which is very painful because it starts at 10 years. So you only start getting rewarded for long service after 10 years of work. And therefore, it is also usually a percentage of the basic salary. It can be 5%, it can be 10%, depends with your CBA, depends with the industry, depends also with the number of years of service, because some CBAs then increment the percentage based on the number of years that the employee has also served within the organization. Now, it is very important to also note that a gratuity does not have a tax-free portion, because people confuse a gratuity with a retrenchment package. Now, these two, though they are lump sum, both of them, they serve different purposes. Like I said, with a retrenchment, we are compensating an employee for loss of employment. In other words, we're saying we're giving you this money to be able to cushion you look for of a retrenchment. And that is the reason why it has a tax-free portion. Whereas a gratuity, we are saying we are thanking you for long service. It's gratitude. It's coming from the word gratitude. Gratuity, we are saying thank you. We are recognizing your loyalty over the years, and we're now giving you something. Therefore, because of that, it is usually at the evolution of an industry, and it does not have a tax-free portion. So it is not the same as a retrenchment package. Therefore, when you're calculating your gratuities, usually gratuities, they are treated as irregular earnings, and therefore they are also calculated separately in terms of their tax, and then the tax is added to your other taxes, your monthly taxes, when you're calculating the total tax payable for an employee. Okay, so this is a gratuity, and it is important for us then to also check with our own CBAs. So these are the calculations that I felt we needed to discuss today. I just wanted to quickly look at these. So when you're now, next time you're putting through your overtime, you should be able to go and check and see what the calculation was. And you can also be able to check and make sure that it is also very correct. Okay. There are other calculations that we can look at, especially for your statutories. Normally, we cover those separately. For instance, the NASA statutory, we covered that last week when we were looking at the NASA update, which we did with you. So we looked at the NASA calculation, which was being calculated at 4.5% of an employee's basic, and the employer also pays an equal amount. And we also spoke and discussed about grossing up allowances if the basic is less than the allowances paid to an employee. We looked at that gross up effect. So those calculations are done for your taxes. We also do those. We're going to be doing those even when we are going to have the workshop on the 28th of April. Towards the end of the month. All right. Otherwise, this is what I wanted to share with you guys. Are there any questions that you guys have? Please ensure, can you try and unmute yourself if you want to ask a question. If you want clarity on any area, you can unmute yourself and then you can ask your question and then we can proceed. Well, Colin is saying, hi, Nick, please, can you confirm how to calculate years? What if he joins on the 30th of November, 2020, and he wants to retrench him in April? Okay, so which year? All right. Colin, thanks. We're saying if you want to calculate your years, usually use the anniversary date when an employee joins. So we look at the 30th of November up to current. So we look at 30th of November, that means for 2020, that means the first year will then be up to October 2021. The next will be up to October 2022, October 2023, October 2024, October 2025. So we're looking at 5 years. And then you can prorata if you so wish any months in between. And so you can then prorata those as well. But usually it's saying you use the number of years. So here we're looking at 5 years. That's what we would definitely use for calculating. And I think a lot have just used the number of years from the time they started up until to the current, which year they are in. And then you can calculate the employees' gratuities, or you can calculate the train package there. If there are any other questions, you can go ahead and unmute yourself and you can ask a question. I know today's topic has been fairly easy and simple, and this is one that we normally use. Also, just remind each other of these things that are quite important. Right, it seems like there are no questions. So therefore, before I call it a day, I want to say thank you guys for joining us this morning. Let me just give you some highlights that are coming through. Some of the upcoming events. One, we have our workshop that is coming up on the 28th of April. That is going to be coming up. This is an FDS and HR workshop that we're going to hold here at Touchstone. We want to invite you to come. You know, it's quite good to come. This year, we are looking at collective bargaining agreements and your compliance on the payroll. All right. So we are going to be focusing on some of the statutes that come from collective bargaining agreements. We're going to be looking at some of the, we're going to use two, which is the mining industry CBA, and we're also going to be using the engineering CBA. If you also want us to analyze your CBA in your own industry, you can email me on training@touchstone.co.zw. And if there are any areas of clarity that you wish us also to discuss on the day, you can also write to me so that we can research and have a look at that. But basically what we want to do is to get our administrators, our clients, to be able to appreciate what is in your collective bargaining agreements and to be able to see how best you should implement this on payroll. So we believe that this is a very critical topic, because you find that as you run your payrolls, you have to comply with the parameters set, with the labor standards set in the collective bargaining agreement. So we need to ensure that you also understand how that works. So come and join us. We will be here. We'll be inviting some designated agents from some of these NECs to be able to explain and interpret some of these statutes that are found in their collective bargaining agreements. So it will be good and useful for you to attend. Also, in the afternoon, we are then also going to have a tax session. We understand that you're running payrolls and you're deducting PAYE. It's important for you to understand how PAYE is being calculated on the payroll. You need to understand how PAYE is calculated for FDS employees as well as for non-FDS employees. So we will be looking at practical calculations of how to calculate tax, and you can now see how it works on payroll so that you also have an appreciation of that. So please do come and be with us here at Touchstone on that particular day. One is asking for me to share my email address again. My address is training@touchstone.co.zw. Thanks, Tracy. It's training@touchstone.co.zw. Please come and join us on the 28th. And then in the month of May, we also have usually our Getting Started course, but we also have our intermediate course for that's level 2. So for everybody who has done level 1, but they haven't done level 2, again, in May, we have that opportunity for you to be able to do your level 2, and you can join us in May for the level 2. So please do come and be with us on that particular day, and you can go through your level. Mills, how much is the training on the 28th? The workshop on the 28th is costing $195, and that is for a full day workshop where we'll be starting from 9 in the morning right up to 3 p.m. in the afternoon, and even almost up to 3:30 or even 4, because we want to ensure that you guys, when you come in and do this, you'll be able to calculate taxes on your own. I think it's quite critical. It is quite important that we be able to calculate taxes, more so when we are now working with terms. Because when we are now working with terms, I think it is very, very important for us to be able to come in and you can calculate taxes, so that even when terms calculates its own tax, you should be able to do those calculations yourself, and you should be able to also query what terms has brought up. You should be able to query what payday has brought up. I think when you then have that kind of a conversation, it becomes more constructive. And you can see the flyer that we've put. You can actually see the flyer. I think we've posted it on our platforms. It is there on our WhatsApp platform. We've also emailed it to you. Please, when you receive this email, can you just acknowledge that you have seen it? Reason being, we also want to make sure that everybody is receiving what we are sending out. So please just acknowledge to say I've received it. If you are going to book, please also book. We encourage you to book. You book through our reception. You can also use the email reception@touchstone.co.zw, and you can confirm that you are going to be meeting there. Otherwise, thank you very much, ladies and gentlemen. Thank you for joining us this morning.